my video on daily bias. Today I'm literally just going to be talking about daily bias and how I find it for my strategy. There is a video on my strategy that's already uploaded. If you want to see it in full play, you can pretty much go to that and see it. But I'm just going to break it down into separate videos now, and this is going to be the first. So for my daily bias, what I do is I look for the most recent break of structure. Now, do you know what a break structure is? It's pretty much something like, let me find a little quick one. Something like this here, where you have a high, a low, and then price breaks above that. So after price moves in a certain direction, so this time price wanted to come down, so price came down, and then it changed direction by breaking above a previous high / swing high kind of thing. So that, yes, that one there. And then as you can see, price closed above that. So you'd excuse me, you'd be bullish based off of that. If you look for another one, price has been weird, so it's like harder to find. You can look at this one. So price was moving down, then you had a high, it created a low, and then it broke above this high here. So that is simple on break structure. That is what you're looking for when price is moving in one direction and then it breaks to the opposite side by going in the opposite direction. So how do I find my daily bias? Let me just, where the fuck's price, bro? So yes, you're looking for the most recent break structure, and we look at this on the weekly, daily, 4-hour and 1 hour charts. So those are the charts we look at for our daily bias. So the first one, what are we on this? So there was a break of structure here. So here we broke structure to the upside. We could pretty much use either of these because they've both done the same thing. So that would class as a break there. So based on the weekly, would be bullish because price not at one point broke back down to the opposite side. Yes, it may have came lower, but it never broke the previous low. So price was still bullish. So then when we go to, so weekly, let's put it down here. So weekly on here was bullish. Then daily. So the most recent break structure on the daily was it never broke to the downside, never broke. So this is just pretty much consolidation here, but obviously down here is where we had one. So you had boom. There's the price was pretty much consolidating. It wasn't doing much, but it moved lower, created the high, went low, and then broke above it. So that means we'd be bullish. Obviously this is consolidation, so we probably wouldn't even trade this, but overall price on the daily is also bullish. So we would go to, where is it? This. It goes here on the daily, would also be bullish. And then the 4-hour. I like the 4-hour. I feel like the 4-hour is strong for confluences on the day. So on the 4-hour, we see pretty much instantly the most recent break structure is here. So let's get rid of this. So the most recent break structure on the 4-hour is this here. So prices obviously went up, came down, broke structure to the downside, came down here, then it created a high, created a low, created that high, created a low, and then broke above it with that candle. Remember, with break structures, the candle has to close. If you have a wick and the wick's above it, it doesn't mean anything. It has to actually close, and the more it closes above the break structure, the stronger the confluence is. So when we go back to, I guess I never wrote anything in my life, did I? Bombaclat. 4-hour would also be bullish. Let's move that up. And then finally, it is the 1-hour chart. It's pretty much straight away again. You can see that the most recent break structure was a bearish break structure. So price went up, came down, created a high, then the low broke below that. Now, because of this candle, I'd be less confident, but if we look at the other time frames, we're bullish on 3 out of 4 of the time frames. So in total, we are bullish on the bias of the market today. That's what I'd be. I'd be bullish based on the 3 out of 4 being bullish. Now, the 1 hour is bearish, but the candle acted like this, plus with the others being bullish, I'd still be bullish on this because look, it looks like it's moving back up. But overall, it would be 3 out of 4 bullish bias. So if I go back to the little thing, so the 1 hour would be bearish. But like I said, the most recent break structure on each of them is showed that the weekly was bullish, the daily was bullish, the 4 hour was bullish, and the 1 hour was bearish. So because of that, we'd be bullish on the day. So let's say we wanted to take a trade. I'd then only look for sell side things. So for example, when I say sell side, I mean the lows. So if I get rid of these because I don't need them anymore. So let's put these in. So say New York opens around there, 8 o'clock for London. Asian was boom. So because we're bullish, what I'd want sell side to be taken. So this low here, Asian low is already taken, so I don't have to worry about that. So pretty much I'd want price to now come down, take the sell side low, and then push back up, because we are bullish and we want liquidity to be taken. We don't want a higher liquidity to be taken because we want price to go up, and for price to go up, we need to take out lows and fill in the big players' orders down here. That's why when I'm bullish, I never put in the buy side liquidity, and if I'm bearish, I never put in the sell side liquidity. I only put in the liquidity that is relevant to my bias. Then obviously on other time frames, you'd look for other things like fair value gaps. Like there's this huge fair value gap. It's not really accurate, but so price has already come into that and close out of it. So you're bullish. Now you'd still want price to come down, take the low and push up, but it just depends on the day. There's so many things that go into it. The more you trade, the more you start to learn things like this. I already know I'm not trading today, so it doesn't really matter. But when you're actually trading, these are the things you look for: the fair value gaps, the daily bias, the liquidity sweeps, the break structures. You put it all together and you come up with a strategy. But overall, that is how I find my daily bias. That was just a quick little video on that. I hope you understand it. Any questions, leave a comment, message me, do whatever you need to do. And thanks, like, subscribe, blah, 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 blah.